Hey, Personal Finance. So I'm not going to be with you guys today for sync time because, as you read, I have a lack of grandparents today, so I'm going to be watching my own kids, and it'll be noisy if I'm with you guys. Like, you won't like it. So I'm going to make this video to talk you guys through the NEFE insurance assignment. You might not need this video, but if you're welcome to use it. I'm going to talk through each of the questions and show you how to answer them there. So, So NEFE again stands for the National Endowment for Financial Education, and this unit is about insurance. So welcome to the insurance unit. Let's look at the thing that we're supposed to fill out today. So list 4 methods of dealing with risk management and provide an example for each. So I'm going to practice good reading skills, and I'm going to read the headlines and kind of scan this stuff. I'm looking for... What am I looking for again? 4 methods of dealing with risk management and an example for each. 4 methods of dealing with risk management. Okay, I see risk management. Okay, I see 1, 2, 3, 4. Okay, so we can avoid the risk, reduce the risk, accept the risk, and share the risk. So let me write that down first. Avoid the risk, accept the risk, share the risk, and what was the other one? Reduce the risk. So I'm going to go ahead and come up with my own examples here real quick. Avoid the risk, drive the speed limit. Don't be a crazy person. Accept the risk. Get insurance would be like protect yourself basically. Well, accept the risk, maybe drive safely also. Share the risk is also, you can answer that with get insurance. Share the risk means that we're talking about risk in a financial sense here. So if I get in a car accident, that's going to cost me a lot of money, right? Just in the fixing of the car, in the, liabilities and all that kind of stuff. So there's a small chance that I'm going to get in a car accident this year, right? It might not happen this year, but it might. And if it does, it's going to be catastrophic for my finances, like for sure. Same thing if I get sick and have to go to the hospital. If I don't have insurance, that's going to be catastrophic for me. So sharing the risk means that all of us have this certain amount of risk of getting in a car accident or going to the hospital or things like that. So if we buy insurance, what that does is it means that there is a collective amount of money that's sitting there ready to be accessed if we need it. I might not need it this year, but I might need it next year. And I'm not going to want to save up, $50, $25, $200 every month for myself. But if I put in a certain amount like if I buy insurance for a certain amount each month, then that protects me. That shares my risk with other people who have the same risk. And then when we all need it, we can pull it out and it's there for us. That's the idea of insurance. So reduce the risk is going to be, and let's see what they said about this. So avoid the risk is going to be, like take the train if you're worried about a plane crash. Walk to school instead of that. You could wear a seatbelt is a good way to reduce the risk. Accept the risk. Okay, so accept the risk means like you're just not going to worry about it. Like I might not buy a protection plan on my new video game because I just am fine with maybe it'll get scratched. Maybe it takes 3 years for it to get scratched, but I'm just going to accept that. That's fine. Or I could share it. I could buy a protection plan, right? Reduce the risk. Keep my video games in their cases is a good example of that. Drive the speed limit, wear seatbelts is a good way of accepting the risk. Wear seatbelts. Okay, the average renter has how much worth of stuff? Okay, let's see about that. The average renter, here we go. The average renter has more than $20,000 worth of stuff. Oh my gosh. $20,000. What is the average cost per emergency room visit? Hold on just a second. Okay, so what is the average cost per emergency room visit? Let's see what it says. It says page 81 is where we'll find it. Okay, the average cost, sorry about that. The average cost per emergency room visit is $560. I would guess that's really low. I can't imagine going to an emergency room for, I mean, like an ambulance ride is like $900 if you're not insured. So I imagine the emergency room visit now would be more like in the couple of, sorry, I clicked the wrong button. So we'll say what they said, which is $560. But really, honestly, I think it would probably be a lot more than that. What is the average cost of a disabling auto injury? The average cost of a disabling auto injury is $49,700. See, that sounds like, assume that things are just like catastrophically expensive to deal with. So, yeah, that makes sense to me. Okay, list 5 methods of reducing your insurance costs. All right, let's check this out. 5 methods of reducing your insurance costs. I am looking for numbers here. Wait, let's see what page that was going to be on. Page 83. Okay, there's 82. Oh, there we go. I see 5 bullet points here. So we are going to choose a reasonable coverage limit. So like I don't need to insure my car for $1 million. If you have seen my car, you would know why. But it is, you know, it makes sense to insure it for a bit. Go for a higher deductible. Okay, so a higher deductible means that you are going to pay more up front. So like my deductible on my health insurance, I think, is like $2,000. So we have to pay for sure, like if we go to the emergency room, we're going to have to pay $2,000 of that. And then after that, insurance is going to cover it. So the higher the deductible, the more you pay up front, but the less you pay per month. Okay, what's the next one? So shop for your insurance policies like you would any other purchase. Yeah, and also, there are people called insurance agents, and they can help you find insurances, you know, from a bunch of different sources that might give you a better rate. And that can make a big difference because, I mean, like car insurance is like a few $1,000s every year, and that ends up being like a couple $100s, but it can vary from like $70 to like $500. So you want to shop around and make sure that you're getting a deal that's going to work for you. Okay, 2 more. Ask your insurance agent if there's anything you can do to lower your risk, which will in turn lower your premiums. So I'm going to just say lower your risk. Copy. And what's this last one here? Consider getting all of your policies from the same agent or company. Yeah, so like for me, we have auto insurance and renter's insurance from the same company, and that makes both of those a little bit cheaper. I'm going to copy and paste this, same agent or company, and we do it through our insurance agent, who looks out for us and gets us cheaper deals than we would find on our own. So list 5 important insurance-related documents to keep in your files and 2 important documents to keep in your purse or wallet, page 83. All right, so I'm looking for what to keep and where. All right, check this out. Watch this. Blue. Okay, so in your files, we're going to need current insurance policies. So like I always keep my auto insurance in my car. I can access it on my phone really easily also. Premium statements tells how much I pay. It's good to have that kind of financial documentation around. Medical bills you've paid. Okay, so if maybe there's some kind of glitch somewhere, you can fix it. You can say like, nope, I have this document. Look, it's got all your numbers on it that you need. I paid this. Inventory of your personal assets, just so you know. Like if you were in a situation where you had somebody around that was stealing things, for example, or, you know, if your house was broken into for whatever reason, like it's good to have a list of the stuff, especially like the expensive, important stuff that you have, so that you can like document if it goes missing, like what it is, how much it is worth. And then documentation for any claims that you filed. So yeah, if you are in the midst of, you know, working through an insurance situation with your car, or with like if you had dental work done and you're waiting on that, those are all things that you want to keep around because you're going to need to deal with them, and it's just you want to hold on to it. So I'm just going to, oops. Oh, I never said copy and paste. So copy and paste. Okay. So younger drivers, okay, what do you think? Do younger drivers have higher or lower insurance premiums? Remember that insurance, the purpose of insurance is to share the risk, but it's not shared equally, right? Because insurance companies know that some people are higher risk and some people are lower risk. And the people who are higher risk are going to have to pay higher premiums. So I'm going to go ahead and just say younger drivers have higher insurance premiums. Because you guys are more likely to get into car accidents. You're more likely to drive a little bit recklessly. I'm not saying you guys as individuals. I'm just saying young people as a whole who have less experience driving, blah, blah, blah. Insurance companies feel that way about you. So females under the age of 25 have higher or lower insurance premiums than males of the same age. I don't know. Let me look at this one up. Page 85. Page 85, 84. Let's see. So gender. Okay. So males under the age of 25 have significantly higher accident rates than females under the age of 25. So male drivers pay higher premiums than female drivers. People make jokes about girls not being good drivers, but in truth, guys get in more accidents. So there's that. So females have lower, under the age of 25, let's say. Copy, paste. Have lower insurance premiums. Okay, how much longer is this? Ah, there's so many questions. Okay. Married people have higher or lower insurance premiums than single people. Let's see. Married people are more careful drivers, so single people pay higher premiums. We'll just copy and paste that. Copy, paste, okay. The type of car you drive changes what your insurance premium would be. Yes or no, and provide an example. Okay, type of car. Okay, type of car. Ooh, even the weight of your car and the age, value, size, weight, and age of your vehicle. Even the cost of replacement parts are essential to determining your premium payment. The model of your car is also a factor. So sports cars tend to be involved in more accidents than family cars. Yeah, so if you have a sports car, they're going to assume that you're going to drive it a little bit like a crazy person, and that's why you're going to have a higher premium there. I'm being a terrible role model here, so let's rephrase this. I did just copy and paste a bunch of this, but let's see. So, I mean, yes. And then I'll just quote this. So I'm not taking credit for it. I'm saying this is what I found in the text. The value, size, weight, age, okay, model, okay, so yes. Safety features such as airbags, anti-theft equipment, and anti-lock brakes can often reduce your premium. So the less risk you have, the less premium you'll have to pay. The more risk you have, or the more risk it seems like you could have, the more premium you're going to pay. So if you do not drive very far, your premiums will be lower. So, yeah, they do ask you like how many miles you drive to and from work every day or to and from school every day. And if you drive less miles, then you don't have to pay as much because you're less wear and tear on your car, as well as less risk of crashing into somebody because you're not you're not driving, you're not on the road as much. So who pays more for insurance? People who live in urban or rural areas. It's going to be urban. Let me just double check that, but urban folks are more likely to be like driving around. I mean, there's just, things are closer together, cars are closer together, there's more cars. Let's see. Location. Yep. The odds of an accident occurring are statistically greater in a highly populated city than a small rural town. Urban residents tend to pay higher premiums. Okay, I have to stop this video right now because it cuts me off at 15 minutes, so I'm going to make a part 2 to get you guys through the rest of it, okay?